The recent discussions at the World Economic Summit in Riyadh have brought to the front burner critical issues surrounding Nigeria's ongoing economic reforms, including unification of the exchange rate and the decision to remove fuel subsidy. According to President Bola Tinubu, who spoke at the opening of the two-day special World Economic Forum in Riyadh, he said last year's removal of petrol subsidy and current efforts by his administration to manage Nigeria's foreign exchange market were necessary steps that prevented the country from going into bankruptcy. The president also appealed to bigger economies of the world to actively participate in the promotion of prosperity of the African region to achieve peace, stability, and economic growth.
Concerning the question of the subsidy removal, there's no doubt that it was a necessary action for my country not to go bankrupt. One, to reset the economy and the pathway to growth. It is going to be difficult, but the hallmark of leadership is taking difficult decisions at the time it ought to be taken decisively. Along the line, there is a parallel arrangement to really cushion the effect of the subsidy removal on the vulnerable population of the country. We share the pain across board. We cannot but include those who are very vulnerable.
Well, let's talk more around this and, of course, some economic issues that might interest you this Monday afternoon. A research analyst with Chapel Hill, Denham, Nabila Mohammed, joins me to start the week on Business Nigeria. It's good to see you, Nabila. Thank you so much for joining the program.
Thank you for having me. Good afternoon.
Yes, we will say that a lot of issues raised again at this special economic forum. What comes to me is the reaction of President Bola Tinubu to the removal of subsidy and, of course, the floating of the foreign exchange market. Now, I'd like you to react to some of this, looking at the fallout that we've seen in recent times. I know you've monitored all of this, but what do you make of the fallout of some of these policies and the position of President Bola Tinubu?
So I like the way you started. Those two key policy reforms were what, explained the whole of last year, 2023, since this new administration. And I would like to just put some of the things that the president said in context. Now, starting from the fuel subsidy, it is no doubt that if we look at how our debt servicing was vis-a-vis the government's revenue, it was quite huge, quite large. I'm talking within the range of 90% to 97% of our revenue. Now that we have removed the fuel subsidy, it's some form of savings from that front, and which will support the revenue stream going forward for the government. So in that line, I would agree with him that yes, truly, it was something that was likely going to make Nigeria bankrupt, given that we are still borrowing, and it's not as if we have put a halt on borrowing and we still have to service that debt. And if we now that we've removed the fuel subsidy, what it simply means or implies is that we'll be saving on that front and we would not have so much burden on the revenues of the government. And the second issue, of course, that if we are even looking at the fallout of it, we have seen that the cost of doing businesses has sort of gone up. But then there has been something that has come into play since the start of 2024, which of course is the start of Dangote refinery, and which we expect to sort of cushion the effect of the impact of the removal of fuel subsidy on the entire country, whether in terms of businesses or in terms of private individuals. Now, if we look at the FX market, unifying the exchange rate was also another thing that we had to do, given the fact that we're trying to make it in such a way that it is transparent and it's going to be a rate determined by a willing buyer, willing seller model, which we have seen start to play since the unification happened in Q2 2023. So that has also come into play, and given the tight monetary policy stance, we have seen some form of inflows, especially from the foreign portfolio investors. In fact, just to put in context, the entire of 2023 inflows from foreign portfolio investments alone is not as much as what we have seen from January to April, that's 2024 year to date. That is around 127% increase from what we had in the entire of 2023, which simply implies that truly some form of effects have started to come into the market, and it's because of some of the policies and reforms that we're seeing on that front. So on that, just looking at these two key policies, yes, at least the president alluded to the fact that it's going to be difficult, given that we are still trying to make sure that some of our infrastructural gaps are covered. It would also mean that they have to also be on their toes to make sure that some of the issues around infrastructure deficit is fixed, and the country starts to see respite, not just from policy side, from also the fundamental side of things, and making sure that the entire of the country or the economy moves in such a way that it will be best for everyone. And I would like to add that this is not something that can happen overnight. It's something that will take it a while before we start to see some form of respite of with regards to these policies. But we like that some of these policy reforms have sort of started to see changes in terms of inflows for the FX market, and the start of Dangote refinery that would supply products to the markets, whether in terms of diesel. We've seen what happened to diesel prices recently, almost reducing by almost 50% from over 1,500 levels to around 960 naira per liter, is something that is quite positive, especially for businesses, given that that accounts for most of their operating costs. So generally speaking, these two issues that he raised and his thoughts around it are really what I try to put in context by saying that if we look at how we have been servicing our debt and how much of our revenue it takes, just saving on the subsidy side will sort of bring some form of respite on that front. And also the unification, of course, of exchange rates and how it has translated to, the inflows of FPIs, as well as other supporting policies by the CBN, of course.
Let me quickly follow up and ask you that, do you now think that the level of confidence expected in our market are we getting to that point? Is it returning, looking at these figures you reeled out and the positive that we see, a positive outlook? That's on one side. Because we see that also the president was able to secure about $600 million Danish investment that was also in his visit to the Netherlands very recently. So would you say this is paying off gradually, or what?
So I like to think of the president as Nigeria's chief marketing officer. I think he seizes every opportunity he has when he meets the world leaders to just pitch the continent, the African continent, pitch Nigeria. And some of these world leaders also look out for how transparent we are in terms of policies that we roll out, as well as implementation of those policies. So I would say for the Naira, our outlook for the Naira this year is positive, especially if we continue to see the implementation of these policies that have been rolled out. Now, CBN is not trying to use the reserves or anything, the reserves in particular, to defend the currency alone. Rather, what they have been doing are releasing policies and implementing policies that revolve around improving the level of supply in the FX market. I'm talking about the policy on banks having to zero their long net open positions. I'm also talking about the resumption of sales to BDCs, just sort of boosting supply in the market. I'm also talking about the fact that at intervals, the CBN also participates in the FX market. I mean, the CBN is a player. If you look at them and how they play in the FX market, they supply, they also take as well. However, what we have noticed is that since the start of this year, they have supplied more than they even took out of the market, hovering around close to $600 million rather, has been supplied from the CBN's front. So that is a positive thing. And if that is sustained, and the level of supply we continue to see is sustained, and there is still, of course, the supporting side of the Monetary Policy Committee. I mean, since the rally, interest rates have risen, that's the policy rate has risen by 600 basis points, and we've seen attractive yields in the market. So it has sort of encouraged FPIs to bring their funds into this attractive, to buy into this attractive yield environment. And that is positive flows, especially when we look at it from the FX point of view. So the outlook is positive, and if we are even looking at the low-hanging fruits, like you mentioned, that the president has secured funding from the Netherlands, we are seeing that there's also an anticipated World Bank loan that would be dropping very soon. And if that happens, or if that materializes, those are the low-hanging fruits, aside all these other policies that have been put in place by the Apex Bank, as well as supporting policies by the fiscal side of things as well. If that continues to materialize, of course, we would definitely see that the rates will become more stable, businesses will be able to plan better, and we'll definitely start to see it filter into our inflation at the end of the day. So really, if all these things continue the way they've started and more policies that are supporting the previous ones come out as well, we'll definitely see respite from that.
Now, let me play the devil's advocate and ask you this question. Let's look at the man on the street. Yes, I see that smile, and that's where I'm headed. Who has to grapple with hiking electricity tariff? Who also has to grapple with fuel scarcity, which at the moment is on the other side? What's your outlook? Many say inflation might continue to shoot up. How do we rein in inflation with some of these policies?
So inflation, of course, is a result of different factors that drive it. And for the layman on the street, the first thing that we should be anticipating to hit the market is going to be the PMS. As we know, the Dangote refinery will be supplying PMS to the market, just like they started to supply diesel. And the first supply for diesel was around 1,400 per liter, and then we saw another supply that brought the prices down to around 1,000. So when we see that happen to PMS, of course, it will be a positive thing and provide some form of respite, especially with the scarcity that I like to think personally is a bit artificial in my view. But then if that happens from Dangote Refinery's point of view, supply of PMS, that should bring some respite in terms of prices and in terms of supply of PMS in the market. As regards to inflation, as I mentioned earlier, is a result of different things that drive it, largely on the supply side for the way our Nigeria economy is, and very little, of course, on the demand side. But then we've seen the CBN try to tighten the monetary policy stance, especially on their own fronts, by hiking interest rates, raising the CRR, and also reducing loan-to-deposit as well ratio for the banks. All this is to reduce the money in circulation. Now, on the fiscal side of things, it's not something that we expect that will happen immediately, but then we should see some form of plans in motion as to how the government intends to address infrastructural issues, all the legacy issues around insecurity, around power supply, very important, especially for businesses to thrive and for them to be able to go about their production or manufacturing processes in such a manner that it would not have a ripple effect, of course, on Nigerians when we look at price increases or increase in prices of their goods and services. So when we see all these things happen, then you definitely see inflation addressed. Another thing I would like to highlight, of course, is the imported food inflation. And given if the stability in FX, of course, continues, we should see further respite on the front of imported food inflation, which also feeds into our food inflation when the data is released, of course, on a monthly basis. So really, it is a matter of time, but then as a layman, we would expect that start to see some respite as soon as possible. So we would expect the government, of course, hasten or sort of accelerate the rate at which they are trying to reduce inflation on the fiscal side of things, given what we have already seen on the monetary policy point of view.
Finally, before I let you go, President Tinubu talked on the need to collaborate, economic collaboration and inclusiveness. That's, I think, across the continent to achieve stability and growth. What do you make of that? Is that the way to go? AfCFTA is on one side, and I'm not hearing much happening around that.
So, calling for collaboration across the continent is very important because, I mean, as an African continent, we have a lot of untapped potentials. We have resources, natural resources that we can leverage on, especially in terms of looking at comparative advantage, what country needs what that we have and what do they have that we need. All these things can really come into play when there is that collaboration amongst all the countries in the continent. And pitching that as well to world leaders at the World Economic Forum, I think is also positive if we look at the fact that so I feel like it's not like we're trying to say that the country cannot do some of these things on their own, but then it's just easier to have work together as the entire world working together, just collaborating on a lot of things that would provide, because there is this thing that I like to think that there is an information that this person has or this particular country has or this resource that this country has that the other country needs. And if there is that collaboration, if there is that avenue where these two countries can meet and agree that these are the things that they can exchange with each other, it will bring about development. It will accelerate the rate of development in the entire continent. So really pitching that inclusivity as well as collaboration is necessary, of course, for the entire nation as well as the African continent. And it's something that I feel like it is with time, given that there has to be a lot of plans and how to roll out the whole exercise of collaborating amongst ourselves in order not to have any friction in any form or in any way. So it is very important that there has to be step by step as to how that happens. And when we start to see, of course, when we start to see that happen, we'll see some form of respite as well.
All right, I must thank you so much for your time. Nabila Mohammed there, research analyst, Chapel Hill, Denham. Thank you for joining the program. We appreciate this.
Thank you for having me.